By Leanne Jones from Bell Direct in Sydney. Leanne, just looking at the market, obviously down 1%. We've seen a couple of things happen today, such as Regis Health debuting, I mentioned there, now tracking at $3.90, so a nice premium to the listing.
Ingrid, that's exactly right. We did see that nice debut coming on the market and certainly confirming quite a strong IPO market that is continuing over here in Australia. So certainly good to see that coming online, particularly after we are seeing quite a sea of red across screen, and we are actually seeing that healthcare sector, unfortunately, coming under pressure. We are also continuing to see those financial stocks being hit quite strongly. Of course, we have started to see quite a significant pullback in a lot of those major banks, but also having a look at some of the leads that we received from overseas markets. I think that really has continued to drag on the market today. Over in the US, we actually did continue to see a sell-off in some of those small cap stocks, and actually having a look on the ASX 200 today, we are seeing our small cap index coming under pressure, down about 1%. That consumer discretionary area, another one under pressure after we did see that weekly consumer confidence read down about 1%. But as you say, the only sector really holding up our market today being that materials sector. We did see mostly higher commodity prices coming through overnight, and that iron ore price actually does look to be stabilising around these levels. So I think that might be providing a little bit more confidence now for investors, and we are seeing the likes of some of those iron ore miners performing quite strongly today. Of course, it will be all eyes on that RBA rate decision at about 2:30 today, so we will be keeping our eyes on that Aussie dollar. But volumes actually are also looking quite strong today, particularly after that public holiday yesterday. But unfortunately, seeing those losses today really continuing on from those losses we saw yesterday as well.
Just a couple of stocks you're watching. Resolute Mining, of course, confirming some high-grade drilling results. That stock up about 4.5% right now.
Ingrid, that's right. We're actually seeing quite a positive reaction, certainly in the short term, to these results today. And it actually comes off the back of a recent upgrade where they provided an update to their reserves of about 30%. So really continuing to increase those reserves, and that's certainly adding some confidence for investors. But actually recently they came out with a fairly weak result as a result of those falling gold prices, and also some lower production as a result of the closure of one of its mines. And since that result, the stock has actually been down about 20%. So in the short term, it has actually been coming under a little bit of pressure. Medium term, I think an important driver of this share price will actually be the start of that feasibility study coming out of their Syama mine, which we have heard the announcement from today. And certainly that could be, as I mentioned, a share price driver, potentially in the medium term. Long term, we actually do quite like the underlying fundamentals within this stock. They have a long track record of success and some quite strong reserves as well. Looking at FY15, they are expecting to see potentially lower revenues and earnings coming through, but from around FY16 and beyond, they do expect some stronger free cash flows to come through. So looking forward, we actually quite like the underlying fundamentals. Of course, there is volatility in those gold prices, which is a risk to this stock, but any share price upside, I think, potentially could come from any reduction in costs, exploration success, and of course any production growth as well. So short to medium term, I do think this stock will continue to come under a bit of pressure, but long term we certainly do like the outlook for it.
Leanne Jones, we'll leave it there, but thanks so much for joining us today.
Great, thanks Ingrid.